Are you excited about your apartment investing journey, but the thought of the application process and all the paperwork required is keeping you from taking the next step? Well, you're in the right place, because in this video, we're talking about the apartment loan process. Everything you need to know to finance an apartment building from A to Z. Let's get into it. Before we get into the meat and potatoes of this episode, let's talk about what an apartment building is. And so if you see me looking down, it's because I have my tablet here. So I'm always looking down to kind of get my notes going and, keep myself on track. So what is an apartment loan? We talked about this in our last video, but we're going to highlight it here. An apartment loan is a loan specifically designed to acquire an apartment building. Now, you normally use this loan when you're buying it for investment purposes. You don't really use an apartment building loan when you're trying to live in an apartment. Most of that is for residential, and that's for house hacking and all of that. But when you're talking about an apartment loan, this is normally for buildings with 5 or more units, and you're buying it for the purpose of generating some type of income. So that's what an apartment loan is. Now, how long does the process take from start to finish? You'll see a lot of lenders advertise that they can get this done in 30 days. Some lenders even advertise that they can get it done in 15. And then there's a select few that advertise that they can get it done in 7. The real time it takes to get an apartment loan done is anywhere from 30 to 45 days. That's the normal time frame to get it done, because your lender has to go through a lot of steps in order to get this loan financed, and you don't want them rushing and, trying to get this loan through, because when you're rushing and you're trying to get something through, you can miss a lot of steps, and that could potentially cause a delay. So the process normally takes anywhere from 30 to 45 days. Okay, so now that we have that, there is 10 steps in this apartment loan process. And we're going to break down each of these 10 steps from start to finish. And by the end of this video, you should know exactly what it takes to get an apartment loan done. And you should know exactly how long the process is going to take. And you should know exactly where you are in each step. So let's go over to step number 1. Step number 1 is sending high-level details. So when you finally get a deal that you like, and you finally figure out, hey, this deal looks like something that can be promising. It looks like something that we can buy. This looks like something that I can finally acquire. When you find that deal, you don't want to just bombard your lender and send him the operating memorandum or the pitch deck and then all 3 years of T12 and financials and all of that. No, you don't want to do that. And the reason you don't want to do that is because you're putting a lot on the lender's plate before you even know if they're interested in a deal or not. So what you want to do, and this is going to make you look like a pro, what you want to do is send high-level details. So what do I mean by high-level details? When I say high-level details, I'm talking about you want to send just mainly 5 different things. Number 1, you want to send them an email or give them a phone call. And in this email or phone call, you're saying how much loan proceeds you need. You're saying where's the property located. You're saying the number of units you're looking to finance. You're saying the current NOI. And NOI stands for net operating income. This is how much money the property generates after you subtract all the operating expenses that you need. So that's how you get to the current NOI. And then next, you're looking at the exit strategy. And then last, you're saying the loan type. So what does this look like? So let's look at an example. This is you. Boom. You found your deal. You're happy. That's a happy face. Okay, you found your deal. You're happy. Now, when you found this deal, now that you found this deal, you must go to your lender and you're looking for financing. So the first thing you want to do is send high-level details. You're going to say, you're going to go talk to your lender. This is your lender. Boom. He got his arms folded and he's an angry guy because, he's looking at all these deals and none of these deals make sense. So you need to go to him and say, hey, I need a loan. So the easiest way to do this is to go to him and say this. You're going to go to him and you're going to say, boom, this is you again. You're going to go to him and you're going to say, hey, I need a $5 million loan for a 50 unit multifamily deal in Atlanta. Boom. So that's already high level details. So now your lender knows he needs a $5 million loan for a 50 unit multifamily deal in Atlanta. So now he's thinking, okay, can I do a $5 million loan? Is Atlanta a good market that I want to lend in? And then is 50 units something that we can lend on? Now, that's the first step. So now the next step is the rest of the details. Now you're going to say, okay, this property is already performing. So you're going to say current NOI. Let me delete that. You're going to say, my handwriting is trash, but okay, we're there. So now you're going to say current NOI is 150,000. Then you're going to say our exit strategy. Then you're going to tell them your exit strategy, and basically your exit strategy. And basically your exit strategy is what? Come in. Your exit strategy is hold 5 years and then refinance. Boom. That is it. So now that you've given him the high level details, he can tell you if it's a pass or a play very quickly. So this is what it looks like. Again, so let's look at this high level details. So you come in and you say, hey, Mr. Lender, I need a loan. Your lender is like, what the heck do you need this loan for? Or is it even a deal that I can look at? Now, what most newbies do is they come in and just send the straight all 3 years of T12. They send this large file of an OM and all these documents, and a lender has to go through and look at all of that stuff. And their job is to get you the quickest answer in the shortest amount of time without having to dig through paperwork. So what you do is you make it easy for them. You go to the lender and you say, hey, Mr. Lender, I need a $5 million loan for a 50 unit multifamily property in Atlanta. The current NOI is 150,000, and my exit strategy is to buy it, hold it, and refinance in 5 years. These high-level details, with this high-level detail, the lender can kind of tell you if it's a pass or a play, and he can do it really fast. And after he says, hey, you know what? This is something that, is something that we're interested in. This is something that we can do. This is where you move over to step number 2. So step number 2 in the loan process is where the lender will review the email that you sent over, and they will tell you if it's a pass or play. After they've done that, they're going to say, hey, I like this deal. This is something that we can do. Or they're going to say, hey, I don't like this deal. This is something that we can't do. But if they say, hey, I like this deal, this is something we can do, this is where you move over to step number 3. They are going to request more information. And when they request more information, 9 times out of 10, they're going to request for you to submit an application. This application is known as a 1003. This is basically a mortgage application. This is a commercial mortgage application. So you're going to submit your commercial mortgage application. And then if you don't know what a commercial mortgage application is, I have another video coming up where we'll discuss how to fill out your 1003, how to fill out your mortgage application, and everything like that, so that you can get financing for any apartment loan that you're looking for. All right. So they're going to request that you submit a commercial mortgage application. After you submit that application, this brings us to step number 4. Step number 4 is sending all of the financials that you had. So you remember when you said, I have 3 years of financial returns for this deal. I have an OM, I have rent roll, trailing 12, all of that. This is where you send all of those documents. So they're going to see the last 3 years of financials for the property, which is the rent roll and a T12. So if you have a T12, that's a trailing 12 months. They want to see 3 years of the trailing 12, which is basically the operating statement for the property. And then they're going to see the rent roll as well. And then they're going to want to see any pitch deck or offering memorandum that you have for this property. So that way they can get up to speed on the property really fast. So after you submit your property financials and your photos and all of that, this brings us to step number 5, which is the term sheet. The term sheet is basically a sheet that highlights all the high-level terms that the bank is going to offer or that the lender is going to offer you. This is where you talk about, your LTV. This is where you talk about your term, how long the loan is for. This is where you talk about your debt service coverage requirements. This is where you see what your interest rate is going to be. This is where you see, how they calculated that interest rate. So all of this is where you see your prepayment penalties. All of this is on the term sheet. And basically this term sheet is basically a sheet that they're going to lay out in front of you, and they're going to say, hey, these are the terms that we're offering you. And then you review the terms and you either accept the terms or you don't. Now, if you decide to accept the terms, this is where you're going to submit your good faith deposit. Now, your good faith deposit can range anywhere from $10,000 all the way up to $50,000, depending on your loan size. And this is what the lender requires you to put down, so that way they can order appraisals, they can order all third-party reports and everything like that, and to make sure that you are committed to getting this loan done. Now, also, I should mention, at this point, this is where most lenders will rate lock. And rate lock is basically where whatever interest rates are today, you will be locked into those interest rates for that day. And this is really good for you as a borrower because interest rates tend to fluctuate up and down throughout the course of these 30 to 45 days while you're in due diligence for getting your final loan approval. And if interest rates are extremely low, it's better for you to lock in a rate when you fill out your application, so that way you know exactly what your rate is going to be. So that way it won't fluctuate on you and go super high, and then, it ultimately kills the deal. So you rate lock at application. So let's move over to step number 6. So after we submitted everything in the application, we're finally on step number 6. So step number 6 is underwriting and due diligence. This is where the lender is going to submit all the third-party reports that you need. They're going to look at the appraisal. They're going to review the borrower's credit, the borrower's track record. They're going to review your REO, all of that. They're going to get site inspections done, and they're going to order a title. So they're doing all of this in underwriting and due diligence. They're verifying everything you said, making sure that everything you said checks out. If you said that you own 50 properties, they're going to go through underwriting and make sure that you own all those 50 properties. They're going to review your personal financial statement. All of that happens in underwriting and due diligence. And then after they do all of that, they review the property and all of that. Then we move to step number 7, which is the loan committee. I know that sounds horrible, but the loan committee is where you get your final approvals for this loan to finally get funded. So in the loan committee, this is where they come and say, hey, we've done underwriting on this particular deal. This is why, we think we should finance this deal. Here are the risks, blah, blah, blah. Talk about all of this in loan committee. And then once it comes out and the loan committee reviews it and they say, hey, I think you're right. I think this is a good deal. Then this takes us over to step number 8, where you get the approval or you get the denial. And with the approval, if you get an approval, boom, you're good. We're moving, we're scheduling closing, we're finalizing all the documents, and everything's happy. If you get a denial, or you get a denial is basically saying, we can't finance it like this. We need this, this, and this in order to finance it. If you get that, then you have to go back to the drawing board. You have to figure out what documents are missing, what the lender needs to get this deal financed. And then once they have that, you go present it back to them, and then that should get you an approval. So most of the time it's either approval or we need more documents. And if you need more documents, then we get those documents, we go back to the lender, present it, and then eventually we get you to approval. So that's step number 8. And then with the approval, this is where you get your letter of commitment, also known as LOC. This is where the lender gives you your final commitment letter saying, hey, these were the terms that we issued in the beginning, and here's your letter of commitment. Here's the terms that you're going to be final. Here's the final terms that we can offer. And most of the time, these starting terms and the final terms look exactly the same. Now, if something comes up in underwriting and due diligence, then sometimes the interest rate increase, your loan proceeds come down, maybe the property doesn't cash flow enough and you don't hit the DSCR, so things got to adjust. Now, though, if we run into that, then your term sheet looks different from your letter of commitment. But if everything looks exactly how you presented in the beginning, then your letter of commitment looks exactly like your term sheet. Okay, so after we move to step number 8 and you got your approval on your letter of commitment, then we finalize everything. So we put the bells and whistles on it. We work with attorneys. Your lender's working with attorneys. They're working with the title company, making sure everything is flowing. And then we move over to step number 10, which is closing. This is where you close out the transaction. They wire in the money. You sit at the attorney's office and everything runs smoothly. You close on a deal, and now you can implement your now you can implement your strategy, whether that's value add, buy and hold, or whatever you want to do. So that's the 10-step process. Let's review it from the beginning. Step number 1, you're going to send high-level details to your lender. Step number 2, you're going to let your lender review and get back to you with the pass or play. If they choose to play, you're going to go to step number 3, which is submit your loan application, also known as your 1003. After you submit your loan application, then we're moving over to step number 4, where you're sending the lender all of the property details, all of the property photos, your trailing 12, your trailing 3 years, and your rent roll and everything like that. Then we move over to step number 5. After they have all of that, they're going to issue a term sheet. The term sheet is basically high-level details of what the bank is offering, meaning what's the LTV, what's the term, what's the DSCR requirements, what's the interest rate, what is the balloon prepayment penalty, what is all of that? All of that goes into the term sheet. And then we move over to step number 6, which is underwriting and due diligence. This is where the lender is checking out everything that you said, making sure that it all makes sense, and making sure that this property is a good property for them to finance. And then we move over to step number 7, which is loan committee. They've underwrote the deal. They send it to the committee. The committee gives it the final stamp of approval, or they say, hey, we need more information. If they give you the final stamp of approval, you move over to step number 8, which is the approval and the letter of commitment. If they say, hey, we need more information, then you go and get that more information, you bring it back, it goes back to committee, and then they give you the final stamp of approval, and you get the letter of commitment. Then we move over to step number 9, which is to finalize all of the details, make sure everything is checked and all I's are dotted and all T's are crossed. And then we move over to final step number 10, where you close on the deal. So that is it for today's video. Make sure you leave a like, make sure you review, and make sure you subscribe to the show. And as always, I'll see you on the next one.